Good afternoon and welcome to HYCM's webinar FX Week Ahead Live Market Analysis with myself, Giles Cochran, the Chief Currency Analyst here at HYCM. I'm looking forward to taking you ahead with the markets this week. We're going to be looking ahead, seeing what key schedule events that we have coming up. We had quite a quiet market week last week. In fact, it was very quiet, so I'm expecting things to pick up a little bit in this week, although the US are on holiday on Thursday for Thanksgiving Day and have a quieter day on the Friday with their equity and bond markets having an early close. So just to bear that in mind. As folks are coming in, just going to say hello. Hi, Ali, Farhana, Salvatore. Yeah, good to have you on board, guys. Don't forget, when we're looking at the FX week ahead, even though we'll be looking at different currency pairs, entries, exits, the whole idea of this FX week ahead is not to provide signals. Instead, the idea is to provide education so that you can know when you're trading, how a professional trader goes about making trading decisions, so you can start to make more informed decisions for yourself. So that's the whole idea. It's, as it were, like you're looking over my shoulder. I'm showing you the sort of things that I'm looking at, the kind of key market focuses for the coming week, so that you as a retail trader can make sure you're focusing on the right aspects and you're not sort of missing any key events or focusing on the wrong thing. So just to be aware of that as we go through, that's the whole purpose of this. So that's why I just do this disclaimer, and it's important because market mood and sentiment changes very quickly. You haven't had to be following the market very long, and you can see the constant ebb and flow between the US-China trade war, and literally on a day-to-day basis, the market is pushed or pulled depending on what the latest mood, the latest sentiment is. So as we're getting, folks are coming in now, so I think that's, yeah, that's great. So we'll carry on. Hello, Lolu. Good to have you on board. We'll now be getting ahead into the session. Now, the first thing I wanted to draw attention to was with the pound and what's driving the pound right now. Because what we have with the pound is the pound is being moved at the moment by what's called political polls. And a poll is simply a look ahead as to how people are expected to vote. So this is the YouGov poll, and it's the last YouGov poll we have. And on that poll, we can see that the Conservatives were around 45%, Labour just under 30%, etc., etc. And you see, what's been supporting the pound recently has been this Conservative majority. Now, the voting system in the UK is quite complicated because, the way it works is the UK is divided up into different countries and different sections, different counties, and those different voting areas, are then given a seat in Parliament. So what that means is it's possible for a party to get lots and lots of votes, but not as many seats as you'd expect the number of votes to achieve. So that happened with the Brexit party when it was UKIP. It had sort of, going back, it had quite a few million votes, but only ended up getting, I think, one seat in Parliament. So it's quite complicated. But the poll that I want to draw your attention to it's this poll here, the YouGov poll. Now, I just want to pop that into the questions. I just want to send you the link. Now, the YouGov poll is I'm just going to pull it up here for you. Just bear with me as a moment as right, that's it here. This is the YouGov poll. So the YouGov poll is here. You just go to yougov.co.uk. That is the link. Can someone type me a message, and I will send this link to everyone so that you've got it. Just type me a message, either Ali, Farhana, Lolu, Salvatore, any of you guys. Just type me a message, and I will send it out to you. If you go to the question section, say hi or something, and then I can reply to everyone. That's it. Farhana, thank you. Right. Okay. So now I'm going to reply all. And right, that is the latest update for the YouGov poll. Now you can see this is the 22nd of November. Now, what I want to draw your attention to is this poll is probably given the most emphasis by the market, because this poll correctly identified the 2017 hung parliament when Theresa May famously took the country back to the polls to try to get a Conservative majority and ended up a bigger Conservative majority. She already had a Conservative majority, and it ended up backfiring spectacularly, and she ended up with a hung parliament. It was this poll, the YouGov poll, that predicted that. So this is given a lot of focus. Now, I think that the latest data is due out, and there has been some good recent leads for the Conservative Party. Over the weekend, the Conservative Party released their political manifesto for the upcoming elections, and you can see on the Politico's website, the poll of polls, which I will show you. It's quite helpful, this poll of polls. Again, it's not the market's main focus at all, but this is kind of, the message I've sent you is, here it is. Right, that's the poll of polls here. And you'll see that's really quite helpful, because it sort of takes the rough median of a number of different polls, okay, and it just makes it, it smooths it out here. So you can see the Conservative on the 22nd of November, the Conservative Party have got, and have extended that lead. So all of that is by way of saying this, that when you look at the pound pair this morning, that's why we have some support. Now, looking at the pound US dollar pair, what we can see is the pound has been stuck in this range between 1.3 and 1.28. Now that is the near-term range, okay? Now, as long as it looks like there's a Conservative majority, I'm expecting buyers from this 1.280 region. And if we do get further, pullbacks, I'm still expecting buyers. And that's because as long as there's a Conservative majority, we have Boris Johnson's trade deal that should go through Parliament. So if the Conservative majority is maintained, then there's a majority of seats in UK Parliament. The problems that we had before won't be there, because there'll be a Conservative majority to actually get the vote through Parliament. And you remember, it was only sort of half a dozen or a dozen votes that were stopping the deal getting through in the end. So if the Conservatives have a 30, 40, 50, 60 seat majority, which is what's roughly on track for, then Boris Johnson's Brexit deal should get through, and that should support the pound. So that's why we're seeing the pound supported at 1.28 up to 1.28, 1.3. So it's bouncing between that range. So this is the near-term range. What's going to be pulling the pound down? Well, it's going to be anything that shows that Conservative majority lead falling away. So if that Conservative majority lead deteriorates and say the Labour government suddenly get a lead, then we can expect that to be negative for the pound. So look out for the next YouGov poll. Unfortunately, we don't know when it's going to be announced, but there is one due to come out. And the greater a Conservative majority, the greater bid there'll be for the pound. So that's just something to be aware of. That's what's driving the pound. It's all on those the polls at the moment. It is worth saying that polling has been quite notoriously difficult recently, because people aren't always wanting to tell the pollsters what they really voted for. But as I said, the 2017 poll correctly identified a hung parliament. So that's why money markets are paying a lot of attention to that YouGov poll. And I've sent you the link to that. So you have that. It's yougov.co.uk. So that is the link. I'm just going to, go on. Oh, hang on, wait. Right. Apologies, my actual chart has frozen. So I'm just going to see if I can exit this. Sorry about this. This hasn't happened before. Oh, there we go. That's better. Okay. So we've covered the pound. Now, last week as well was a very, very quiet week. And tomorrow I'm going to be showing you some tips for trading in quiet markets, but it was exceptionally quiet. Volatility was low. And the reason that was happening last week, because there was a fatigue that set in the market between the US and the China trade deal. If you remember last week, there was good news and there was bad news and there was good news and there was bad news. And we just, in the end, just saw this fatigue, and the market was almost like, you know, not moving one way or the other because there were so many repeated contradictory headlines. So just to be aware that so far this week, we're in a risk-on environment, okay? And the reason we're in a risk-on environment is because China has recently announced that there's going to be sort of stricter penalties on intellectual property theft. And remember, between the US and China, the big controversy has been around intellectual property, particularly from the US's side. They've been really concerned about intellectual property. So the fact that China are now increasing penalties for intellectual property theft is seen by the markets as a really positive sign that China's really wanting to get the phase one trade deal done and is essentially being cooperative to the US's demands. That's why the market's been optimistic this morning. We saw the Hang Seng, the Shanghai Composite, and the Nikkei all up, and that was on the optimism that things are looking good. Now, when risk is on, we expect this. We expect Australian dollar, New Zealand dollar, Canadian dollar strength, which is what we've seen this morning, and Japanese yen, Swiss franc weakness. Conversely, when risk is off, we expect the opposite: Australian dollar, New Zealand dollar, Canadian dollar weakness, and Japanese yen, Swiss franc strength. So for this coming week, this playbook is still very much in play. If keep watching for the changing sentiment. If it looks like the phase one trade deal is going to go well and is going to be supported, then we can see risk on, and we see these corresponding moves in the currencies. Okay. So let me just show you that. See if this one will. Yeah, I'll just drag. I'll just drag over a new. Right, here we go. Let's just drag it. I'll just show you Australian dollar, Japanese yen. So it's a typical risk currency. Australian Japanese yen. Okay, so we've seen the Australian dollar being supported against the Japanese yen, and so I'm anticipating that support to carry on. So any fall back towards 73, 75, any fallback here, 73.60, I'm expecting the Australian dollar Japanese yen pair to be bid. So that's just something to be aware of and to keep on your radar. But this is because we're in this risk on mood. Now let's go ahead and look at the calendar that we have coming up. So we'll look at the scheduled events that we have coming up to find the most market moving events that we're looking for. Now, this week, start of the week is relatively quiet. We don't have much market moving events. We have some New Zealand dollar data coming out, retail sales, which will be worth paying attention to and can potentially move the New Zealand dollar, but there's nothing particularly market moving here on Monday. Going on into Tuesday, this is a little bit more interesting because we have Governor Lowe speaking. Now, the subject matter he's speaking on unconventional monetary policy, some lessons from overseas. So the market's going to be paying close attention to that. The Australian dollar recently has had the upside capped. So if we look at the Australian dollar chart, let's just look at Australian dollar US dollar pair. We can see some of the upside to Australian dollar has been capped, and the Australian dollar is being pressured. Now, a lot of this has been the negative sentiment surrounding US-China trade negotiations. And there's also concerns that the RBA are going to be cutting interest rates. So when you put that together, that's why we've seen the Australian dollar pressured. So one key aspect that the market's going to be looking at is this speech by the Bank of Australia's Governor Lowe. Now, the baseline at the moment for the RBA is that the market is pricing in a 25 basis point rate cut for February, and that's seen at about 72% chance. So one of the things that the market is really concerned about is, will the Reserve Bank of Australia not only cut rates, but what would they think about unconventional monetary policy? So things like quantitative easing, negative interest rates. That's the sort of thing that the market's going to be looking at. And if we get Governor Lowe speaking, dovishly saying, unconventional monetary policy is the next step for the RBA, or something very dovish like that, then we're going to see the Australian dollar pressured. So just to remember, the topic, unconventional monetary policy, very interesting. The market's going to be paying a lot of attention to that. And so if we get some dovish comments from Governor Lowe, then expect the Australian dollar to be pressured. Okay, so that's a key event to be aware of, and one it's an event not to miss. Let's just yeah, that's better. Okay, that's better. So that's 9:05 a.m. GMT time. So one to keep on your agenda. Now, as I said, the US has some a holiday coming up on Thursday. You can see here you've got the bank holiday for Thanksgiving Day, and there's a half day on Friday. So a lot of the US dollar events for the US calendar are in the start of the week, and we start to get some of that inventory levels coming. We get consumer confidence. So US consumer confidence will be worth looking at. That always has potential to move the market, and what could move the market here is if we start seeing a weakness in consumer confidence. The consumer of the US consumer is seen as the backbone of the US economy right now, and as long as the consumer is holding up, spending money, feeling confident, then that upholds the whole US outlook. So what would potentially drag the US down would be a drag in this consumer confidence. But remember, the Friday of last week, if you just look last week, we had some good data out of the US. We had flash manufacturing PMIs, a beat at 52.2 versus 51.5 expected. Services PMI 51.6 versus 51.2 expected. And the consumer sentiment was really up, 96.8 versus 95.8. So you can see that was a really, see if we can get that graph here. Yeah, here we go. That was a really nice uptick for consumer confidence. So you put that all together, that's why we've seen at the start of the week some dollar strength on that economic data. So if you go to the dollar index, you can see here it's pushing up through the 98 handle. That's been supported. We saw on Friday really strong, and we're heading up into that daily resistance here at sort of 98.30 and above, with the recent highs at 98.45. So that's a key level to watch in the dollar index. But that's why we've seen some dollar index strength. So going back to this week, the consumer confidence this week will be important alongside with the other US data, as the market's thinking, well, is that confidence justified? We'll have durable good orders on Wednesday, and we'll also have the preliminary GDP for the third quarter. Again, important data out for the US. So that's of these events, the key event that I'm really looking at is the preliminary GDP. Okay, now at the moment that's expected to be 1.9%. So any uptick on that number will be very positive for the US economy. and obviously any downticks will be negative. And the Federal Reserve at the moment, they've said we're not cutting interest rates any further. So they're kind of on a pause, on a hold mode, but they haven't gone so far to say that we're going to be raising interest rates. So the US economy is in this kind of finely balanced, data-dependent situation. So the US data out for the first half of the week is going to be important and flows into that picture. And the PCE data, what the inflation levels are, will be important, as well as the preliminary GDP data, consumer sentiment, and they're the key US data points that I'm looking at. Now, going back to Tuesday, we sort of went ahead to look at the US data for the whole week. We've got some more data for the Reserve Bank of New Zealand. Now, remember where New Zealand are at. They surprised markets at the last interest rate decision meeting by keeping interest rates on hold at 1%. They were expected to cut interest rates to 0.75% by 25 basis points, but they kept it on hold. And so what the RBNZ are saying, their last kind of comments were that we don't need a change in monetary policy. We just want to see the impact of our 50 basis points rate cut at the last meeting. We're going to be data dependent. So the current market probabilities are 20% chance of a February rate cut. Okay, so this means that data is going to be very important now for the New Zealand dollar. So in that context, what Governor Orr says will be important. So if he comes out and says something dovish like, yeah, we really think further rate cuts are coming, or something dovish like that, we're going to see the New Zealand dollar tumble on those comments. So what Governor Orr says is very, very important. His conference is about the financial stability report in Wellington, so it could end up not being, a significant event at all. But with him speaking, very, very important. And again, the New Zealand dollar, like the Australian dollar, is tied up to the US-China trade deal. So if the US-China trade deal is optimistic, it looks like it's going to be completed, that supports the Australian dollar and New Zealand dollar. Conversely, if the US-China trade deal is not going well, then that will be negative for the US-China trade deal. But that's one event to watch on Tuesday. Again, construction work will be important for the Australian dollar. One event to watch, keep an eye out for. Look when you come to the market, see what that data point was. It's likely to drive the Australian dollar alongside US-China trade deals. Then the rest of the day, we got some retail sales out of Japan. That could be potentially of concern to the Bank of Japan if those retail sales keep falling. That's not a good sign for Japan, and could that prompt the Bank of Japan to add more quantitative easing, which would be Japanese yen weakness. So, okay, an event to watch, just to keep on your radar and make sure you check out the reports on the retail sales. This is the one I'm really looking, it's probably of the events this week, number 2 for me is the ANZ business confidence. Now, if you look at business confidence for the RBNZ, you can see out of New Zealand, the business confidence has been very low. Look, August, September, October, and we should get low levels again in November. Now, the RBNZ do carefully look at this indicator. So Governor Orr, the whole team, how businesses, how confident they're feeling will impact their interest rate decision of New Zealand. So if we get a really low reading here, that will be important. So if we see that, going below the September, 54.4 reading, if we see anything lower than that, then expect to see sudden and some prolonged New Zealand dollar weakness. Big events to be aware of. I'm keeping my eye on that. Remember, RBNZ in a neutral, data-dependent mode. If we get this low business confidence, that's really going to weigh on the New Zealand dollar, and money markets are going to begin to price in more chance of a rate cut. And remember, when a interest rate is cut, that devalues the currency. So if we saw low business confidence, that equates to more chances of an RBNZ rate cut, which leads to a weaker New Zealand dollar. That's the connection. That's what's to be aware of. Again, Australian dollar private capital expenditure, another event to be aware of. Let's have a look what else we've got. No, it's quiet. Remember the US bank holiday, Thanksgiving Day on Thursday. And then the main event on the Friday, and this for me is the biggest event of the week, it's the Canadian dollar GDP. Now, where are we at with the Canadian dollar? Well, the Canadian dollar has been, the Bank of Canada had been one of the only banks that hadn't turned explicitly dovish. At their last rate meeting, the bank did have a little dovish twist, and they were mainly expressing concerns about global trade uncertainty and that trade tensions were restraining business investments, and that was helping to cut commodity prices, in other words, oil, because the Canadian dollar is either supported or pulled down by oil. So oil prices going down, global growth going down. The Bank of Canada said, we're concerned that this is dragging on the Canadian dollar. Right, now, so as a consequence, what's moving the Canadian dollar at the moment is obviously US-China trade growth concerns, how much that impacts the globe, and also what's going on with the domestic Canadian economy. Now, last week, Governor Polotz said, you know, that there is a hope of a deal starting to fade, and the expectations for a 25 basis rate cut were he sort of said, you know, the economy is sort of quite well balanced. So although the bias remains to the outside, it's a bit more neutral. So the GDP data is going to be key, because this is going to likely push the Bank of Canada one way or the other. If we get a strong beat, then we're likely to see more Canadian dollar strength. If we get, you know, a miss, then some of those concerns that have been coming out of the Bank of Canada are going to be confirmed. So this, for me, is the biggest event of the week. Again, don't forget the manufacturing PMI, non-manufacturing PMI data out for China. Again, the market does pay attention closely to those data points. We've seen really, you know, low manufacturing PMI data. So anything sort of going back into expansion, I think above 50 would be very positive for the Australian dollar and for risk trades. Okay, that is the main events that we're going through. In order, you know, what I'm expecting: Canadian dollar GDP number 1, and New Zealand business confidence number 2, and then kind of be aware of the Governor Lowe and Governor Orr speaking out for the RBA and the RBNZ, as well as US data that's sort of coming out over the first half of the week. So that's what I'd be looking at. Don't forget next week, not next week, correction, don't forget tomorrow at 1 o'clock GMT time, I'll be running a workshop looking at, you know, strong and weak currencies for the day. I'll be looking for entries, exits, again, not from a trade signal perspective, but from an educational perspective. And also I will be answering folks' questions as to what trade setups they have and making comments on those. So if you're around 1 o'clock GMT tomorrow, please come in, drop on by. It'd be great to see you. Thanks very much for attending the webinar. I hope this has been helpful to you, and look out for those events that I've scheduled, and of course keep your ears open for that UK election poll, particularly the YouGov poll data, and the US-China trade deal. Any news on that will be very important, and will be moving risk trades one way or the other. Okay guys, I hope you have a good week, and I hope to see some of you tomorrow. Take care now, and goodbye.